Hi, I'm Anthony Holman, Head of ETF Product here at S&P Capital IQ, and today I'm joined by Todd Rosenbulth, our Director of ETF Research, and special guest Dodd Kittsley, Global Head of ETF Research at Blackrock. Thank you both for joining me.
Thanks for having us.
Dodd, what's growing fixed income ETF research in your opinion?
Well, it's one of the most exciting segments of the market. It's grown from 5% of the ETF market back in 2005 to now 17% of the overall market. And I think the advantages that ETFs offer that so many investors have gotten familiar with in terms of the transparency, liquidity, precision of accessing specific segments of the market are even more relevant in the fixed income space, because essentially what ETFs are doing is they're moving an over-the-counter market, which is opaque, often very difficult to access, high transaction costs, onto an equity exchange that there is unbelievable competition, there's transparency, and folks have the ability to express a view when they want to.
And what's growing this segment specifically? And we've seen record trends lately. Can that continue?
Yeah, we believe it firmly can continue. We saw a record year last year of $70 billion flow into fixed income exchange traded funds. That represented 27% of all dollars invested into exchange traded funds last year. We think it can continue for a lot of different reasons, but the main one is that investors are becoming more aware of the benefits that the ETFs offer in the fixed income space. Also, there are so many different segments that investors can invest in. So take this year, for example, we've seen many investors concerned about rising rates. So we've seen a rotation within fixed income to shorter duration products, as well as floating rate products. And they were able to reflect a view irrespective of the economic environment.
And that's a good segue, Todd. With respect to those different segments that Dodd alludes to, what are good ways, or how can we play fixed income ETFs in our portfolios?
Yeah, what we've also seen is that a lot of money has moved into high yield bonds and high yield bond ETFs. So the yields have come down quite a bit. But we still at S&P Capital IQ like a number of the high yield bonds ETFs that are out there. So some from iShares, some from State Street, some from others that are in the industry. We think that there's still good value in these ETFs, but you've got to understand the differences between them. And we like a number of these high yield bonds, as well as some of these short-term bond ETFs. We think there's good value on both ends of the spectrum.
And there are many fixed income ETFs that have launched over the past 3 years, some with less than a 3-year track record. Should investors consider these for their portfolios?
Yeah, so we've got coverage of about 190 fixed income ETFs on our MarketScope Advisor platform. About 80 of them have less than a 3-year track record. Now, 17 of those 80 actually earned a top overweight ranking from us. So we think there's a number of good ETFs that are out there that do not have a long track record, but the indices that they're tracking do have a long track record, and you can do analysis on that as well as understand the risk-reward potential of that respective ETF.
Great insight. Thank you both. We hope you enjoyed. To learn more about our research here at S&P Capital IQ, log on to getmarketscope.com.